The European Central Bank is pressuring EU member governments to beef up their fiscal response to the pandemic to ensure the bloc's rapid economic recovery. Following its policy meeting on Thursday, the Monetary Authority said it's doing its part by pouring more cash into the financial system. The move aims to keep borrowing costs low for EU member countries and firms. The ECB has added a further $600 billion to bond buying schemes, bringing the total to $2.1 trillion. The bank's also extending the program by 9 months to March 2022. The Eurozone economy is forecast to shrink by 7.3% in 2020, but is expected to rebound next year as the rollouts of vaccine begins. The ECB kept its interest rates unchanged at zero, saying they'll remain the same until inflation rises to the lender's 2% target.
The monetary policy measures taken today will contribute to preserving favourable financing conditions over the pandemic period, thereby supporting the flow of credit to all sectors of the economy, underpinning economic activity, and safeguarding medium-term price stability. At the same time, uncertainty remains high, including with regard to the dynamics of the pandemic and the timing of vaccine rollouts.
Carsten Brzezinski is the Global Head of Macro for A&G Research, and he joins us now from Frankfurt. Welcome back to the program, Carsten. So an extra $600 billion or so for the ECB's bond buying programs. Obviously, the worry is that the Eurozone will fall into a double dip recession as cases continue to surge and lockdown measures are reimposed in some parts of the region. Do you think this is enough in order to stave off another recession?
Well, it's not going to be enough to avoid a recession, because we will get this double dip, and that's also what the ECB is expecting. So a contraction of the European economy in the fourth quarter is almost a given. A very weak rebound in the first quarter next year will also be a given. But there is very little that the ECB could have done with even more stimulus. So what the ECB is trying to do here is to extend this current level of monetary policy accommodation beyond the original summer of 2021 now to the spring of 2022. And then this is what they aim at doing. If we want to get more stimulus, it has to come from governments. We need fiscal stimulus if it is needed, if the rolling out of the vaccine alone is not enough to really kickstart this recovery next year.
And we know the issue of governments pledging more fiscal stimulus has been quite a difficult issue. It took them many months into the pandemic before they agreed on a EU-wide package, and really we won't see a euro of that money being dispensed to the states who need them until next year. Can we pretty much expect that governments really won't commit any other funds to an EU-wide response?
Well, I think we can already be extremely lucky if we now, tomorrow or today, actually get this European Recovery Fund really starting, because there were clearly opposition from Poland and Hungary. I think that this is now solved in Brussels, and that this European Recovery Fund can become effective in the first month of next year. And I think it still comes in time, because we had a combination. So we had national fiscal stimulus, which obviously differed across countries, differed across also depending on the capacities to spend money. And now on top of that, we have the European level stimulus. So compared to the 2008 or 2010-12 crises, this is already quite a game changer. So we have much more aggressive fiscal stimulus, even if sometimes when you follow the headlines, it doesn't look as if it would be the case.
And we've seen the UK already rolling out the vaccine. The US might do so next week as well. Presumably other countries in Europe will follow suit. Do you believe the end is near in terms of the worst of the pandemic?
In terms of the pandemic, probably, but I have the impression that first things will get worse before they get better. And just look at the political discussion. So we're now heading to Christmas. Some national governments tried actually to relax the lockdown measures, but the price they will pay is further tightening after Christmas. So these on and off lockdowns will continue into the next year. January, February, and then when the weather gets better, when the vaccine will be started to be rolled out. This is when the worst then really will be over. But also, I think we should not be naive. The rolling out of the vaccine will take a long while. So this is also why the ECB said they only expect herd immunity in Europe by the end of 2021.
Okay, let's see how that all unfolds. Carsten Brzeski from ING Research, thank you again.